If you're over 50 and behind on retirement, you've probably heard about crypto. But maybe you're thinking, I don't understand it. It's too risky. I don't have time to learn. Sound familiar? Well, let me tell you something. Crypto is not as complicated as it seems, and you don't need to be a tech expert or a day trader to use it to your advantage. In this video, I'll break down exactly how to get started investing in crypto without making beginner mistakes and without taking reckless risks and without feeling overwhelmed. Let's go. I get it. Crypto seems complicated. It's a new technology and there's a lot of jargon. Blockchains, wallets, private keys. It's enough to make your head spin. But here's the thing. Every major investment in history has gone through this phase. People thought the internet was a scam in the 90s. They thought buying Amazon stock was too risky in 2002. Now, those who took the time to learn, well, they're the ones who won. Crypto is the same. Right now, we're still early. The difference is, now we have real strategies, real security, and a simple way to invest without all the noise. Let's get into it. The simplest way to think about crypto is this. It's digital property, just like owning land, gold, or stocks, but in digital form. Bitcoin is often called digital gold because, well, there will only ever be 21 million Bitcoin, ever. It's scarce, and that's why it's valuable, and it keeps going up over time. And the best part, you don't need to buy a whole Bitcoin. You can buy a fraction of one, just like you don't need to buy an entire pizza. You can order just a slice. Bitcoin is divisible down to 100 millionth of a Bitcoin. That's called a Satoshi. So you can start with whatever amount fits your budget. So if you've ever thought Bitcoin is too expensive for me, well, that's just not true. You can start with as little as $50. All right, so let's talk about the exact steps to buy your first crypto the safe way. Step 1, use a trusted exchange. Stick to well-known platforms like Coinbase, Kraken, or Binance, not random websites promising too good to be true deals. Step 2, create your account and enable two-factor authentication, or 2FA. This adds extra layer of security to protect your money. Step 3, start with Bitcoin. It's the foundation of crypto, and it has stood the test of time. Avoid risky altcoins until you're more experienced. Step 4, use a crypto wallet. Once you've bought crypto, don't just leave it on the exchange. Move it to your own secure wallet like a Ledger or a Trezor for extra protection. This way, if the exchange were to go bankrupt, hello FTX, or get hacked, your funds will be safe in your wallet. Step 5, buy a little at a time. It's called dollar cost averaging. Instead of trying to time the market, just buy small amounts regularly. Most people think that crypto is about trading, watching charts, and timing the market. That's not what I'm teaching you here. We're playing the long game. Hold for the long term. The people who make money in crypto aren't day traders. They're investors who hold for 4+ more years through market cycles. Only invest what you can afford to wait on. Crypto is volatile in the short term, but grows massively over time. If you follow this simple strategy in any past crypto cycle, you'd be in profit. And we're in the middle of a new one. Let's be honest, the biggest risk isn't investing in crypto. The biggest risk is doing nothing. Your retirement savings are getting eaten away every year by inflation. The stock market isn't growing fast enough. And the people who take action today, well, they'll be the ones who win in this next cycle. So the question is, are you going to wait until it's too late? Or are you going to take control of your financial future today? All right, if this video made sense to you, you know how you can't afford to gamble on your retirement. So check out this next video to see how to build a low-risk crypto portfolio so you can catch up on your retirement, but in a safe and secure way.